My next guest isn't worried. He does say 2026 will be the year of a proud bull, not a stampeding one. Joining us now is Chris Hyzy, the Chief Investment Officer for Merrill and Bank of America Private Bank. Chris, I'm not that up on my Western metaphors, so please explain what you see happening here.
Yeah, it's great to be with you, Kelly. I would say this. A proud bull is one that looks back and says, look at all the hard work we did, not just in the last 12 months, but really almost the last 36 months. We've seen a lot. We've been impacted by quite a bit. And going forward on a 26 basis, particularly midterm election years, you get more volatility and you get more of a proud bull that really looks towards profit growth and less towards multiple expansion and profit growth. We have some concerns out there for sure. We're going to have stimuli hit us and some pressures that come in. And if the narrative of our high conviction growth story does not change, those will be buying opportunities, in our opinion.
What else do you see? So let's just kind of look at the dynamics today and ask whether this is going to be the story for the next 12 months. Small caps at all-time highs, the NASDAQ lagging. Is this a temporary phenomenon or to you the sign of what the market might look like for 2026?
Don't really think this is temporary. There will be a little bit more volatility in tech and communication services, largely speaking, because the further we get into this build out, there's going to be more questions as to whether or not that actual growth rate can continue. What we saw last night, what we expect going forward is the growth rate to remain high in terms of the overall capital investment build out. It's going to come down to who can execute better than others. So there'll be some choppiness there. As it relates to small caps are now starting to not just get their footing. As you said, they're hitting all-time highs. We had some fits and starts of that last year, but it really didn't stick. We've been overweight since the beginning of the year. We've been waiting for this, and now you've got potentially some fiscal relief here with 100% expensing and a little bit lower rates, which ultimately helps small caps as well. So we feel pretty good about the small cap space. In fact, we have overweight in large cap, mid cap, and small cap, and that's what's actually channeling our entire overweight in equities right now.
And do you have to take a strong view on what happens with rates? I mean, what do you think is the significance of what the Fed did yesterday?
The biggest significance is really the liquidity announcement. You go from the ending quantitative tightening to actually ultimately using the reserve management program to increase liquidity overall and increase the balance sheet. It's pretty, what I would say, it's a risk-on kind of move by the Federal Reserve. So they were worried about funding. They looked at the funding markets. They didn't want to see what happened again in the fourth quarter of 2018. And they made a good move here, at least in our opinion. And we expect that to continue. They may toggle it down to 20 to 25 billion from 40 billion. But it's a good management program. It's a good risk management program. And I think that's the wild card here. And that's why we expect markets to end on a high note here as we close the year.